The most powerful financial institutions on the planet are running for the hills. Yeah, that's exactly what it feels like when you look at what's happening. These big central banks are moving away from the dollar and from fiat currencies in general. Instead, they're snapping up gold hand over fist, and they've been doing it at a record pace since 2022. It hasn't slowed down at all, and honestly, that should make all of us sit up and take notice. It's not some sudden thing that popped up overnight. I've been saying for years that you really need to hold on to your physical gold and silver, and maybe even add to it when you can. Seeing these powerful institutions do exactly that just reinforces everything I've been talking about. First, let's set the scene with what's going on in the markets right now, because it all ties together. Things are moving quite a bit this morning. Gold and silver are pushing higher, the stock market is up nicely too, and bond yields have eased off a little. We're also seeing some news around Trump saying the US won't rush into any deal with Iran while talks continue. Oil prices are falling on hopes that some kind of agreement could reopen the Strait of Hormuz. But there are Republican hardliners warning that maybe too much is being given up. I think what Mr. Trump is really keeping an eye on are those bond yields. The longer any conflict drags on, the more elevated oil prices stay, and that can push yields up quicker. Though longer term, I'm still pretty bearish on bonds overall. I believe yields are going to climb over the next few years because we're in a bear market for them. But right now, the 10-year yield has dropped about 9 basis points to around 4.48%. That's still relatively high when you compare it to where it was at 3.66% back when rate cuts started in September 2024. It's interesting though, because the 30-year yield only dropped 3 basis points, and the 2-year is actually up 4. The rest of the curve is behaving differently. Makes you wonder if there's a big buyer stepping in there or something unusual going on. Wouldn't surprise me one bit if there's some kind of influence at play. For the precious metals, gold is sitting at about $4,563, up around $54 or 1.2%. Silver is doing even better, up 3%. It touched as high as 78.86 earlier. They're climbing what people call a wall of worry, which is pretty typical in these kinds of moves. The stock futures are looking strong too. Dow up 400 points, S&P up 70, Nasdaq 100 up 425. They're hitting record levels by historical standards, but in this crazy environment of liquidity, that's kind of what happens. People are chasing anything but the currency itself. And if some agreement comes through on the geopolitical side and things normalize in that strait, you can bet the central bankers will use it as an excuse to pump more liquidity into the system. Maybe ease off on any rate ideas. But anyway, that's the current picture. Now, getting back to the main topic that really matters here, the most powerful financial institutions, these central banks, they're the ones who know what's coming, because they've been the ones driving a lot of the policies over the last 20 years or so. I'm not exactly a huge fan of them, to be honest, because they're kind of government monopolies with private interests mixed in. But they have the resources and the analysts telling them exactly where things stand. They've seen the harm from all that reckless money printing, that profit-driven approach that's been going on for decades. They know the bond market is heading in a certain direction long term, and that's why, since 2022, they've been buying physical gold like crazy. Not paper stuff like ETFs or futures contracts, but the real, tangible gold. And in some cases, I'm even hearing they're taking ownership stakes in mining companies too, getting a piece of the actual production. A record 95% of central banks expect their gold reserves to increase over the next year. 95%. Just let that sink in for a second. Almost every single one of them is planning to add more gold to their holdings. The blue part of that survey for unchanged was tiny. And get this, not one central bank said they expected to decrease their reserves. That's a powerful signal. Sure, there have been a couple of exceptions along the way, like the Central Bank of Turkey swapped out some of their gold to help navigate an energy crisis. And Russia sold a very small, tiny percentage of theirs, probably as an emergency measure. But even there, I wouldn't be surprised if in the next few months we hear they're buying it back and adding even more. Their overall direction hasn't changed. The philosophy across most of these institutions is still to keep accumulating gold. The World Gold Council, which tracks a lot of these movements, put out a report on April 29th about gold demand trends for the first quarter of 2026. Central bank interest stayed strong, despite a bit of an uptick in sales here and there. They bought 244 metric tons in that first quarter, and that was up 17% from the quarter before. Poland added 31 tons, Uzbekistan picked up 25 tons, so those were the leaders in the buying. Yeah, there were reported sales from Turkey and Russia, and maybe some sovereign wealth funds, but the net demand is clearly positive and growing. What I'm trying to say is, don't get sucked into the mainstream financial propaganda you hear out there about gold. Back in 2004, when gold was around $400, the Financial Times was writing that it was pointless to hold bullion. Look how that turned out. Here we are now with gold way higher and still moving up, despite what some people say. These central banks aren't buying because of some short-term trade. They know the harm their own policies have caused with all that money creation. They understand there's a loss of confidence coming in the broader system, in fiat currencies, in the dollar's dominance. They've got people constantly analysing the bond market, and they can see bonds are on their way out in the long run. That's why the buying started accelerating in 2022 and hasn't let up. It's not random, it's strategic. And that's precisely why I've been telling you for years to do the same with your own physical holdings. Get it outside the banking system where you control it directly. Don't rely on paper claims that could face issues if things get rocky. Think about it this way. When the biggest players, the ones with the most information and power, are running for gold like this, it should tell the rest of us something important. They've created a lot of the imbalances with years of easy money and printing. Now they're protecting themselves from the fallout. For regular people watching this, it means you should consider doing something similar to safeguard what you've built. Physical gold and silver have been reliable stores of value for thousands of years because you can't just print more of them on a whim. That's the beauty of it. The reckless policies, the growing debt, the eroding trust, it all points in one direction. And now the data backs it up, with these surveys and reports showing central banks are all in on gold. A 95% expectation to increase reserves, quarter after quarter, of strong demand, like those 244 tons in early 2026. Poland and Uzbekistan leading the charge with those big additions. Even the minor sales from places like Turkey or Russia don't change the bigger picture. The trend is clear, and it's not stopping. Another thing that stands out is how they're going for the physical stuff specifically, not derivatives or exchange-traded funds that might have counterparty risks. Real bars, real ownership. Some are even investing in the mines themselves to secure future supply. That's how committed they are. So why does this matter to you sitting at home? Because if the most powerful financial institutions on the planet are fleeing fiat and stacking gold, it signals that the system they helped shape has vulnerabilities. They've printed their way through challenges for 20 years, but now the bond market realities and loss of confidence are catching up. You don't have to be an expert to see that holding some physical precious metals outside the system makes sense as protection. It's not about panic, it's about being prudent. I've said it before and I'll say it again. Add to your stack when you can, keep it safe, and treat it as part of a balanced approach to your finances. Don't let the mainstream noise distract you. They said gold was done years ago at much lower prices, yet here we are with it pushing records and central banks buying more than ever. The World Gold Council data confirms it quarter after quarter. Strong demand, net positive even with a few sales. The 95% survey figure from the end of 2025 is huge. It shows almost unanimous agreement among these institutions that gold is the way forward for their reserves. I've been urging you to follow suit with your own holdings for years now, and the data keeps proving the point. Hold your physical gold and silver tight, maybe add more, and stay aware of these trends. They're not going away. Thanks for sticking with me through this one. If it resonated with you, drop a comment below on what you think about these central bank moves. Are you adding to your stack? Hit like if it helped, subscribe for more, and I'll catch you in the next video. Take care and have a great day. Bye for now.